The size of the European Central Bank balance sheet, or ECB's balance sheet, is already well above 60% of their GDP, as you can see there of the chart in the bottom right on your screen. My friend Daniel Lacalle, who is a hedge fund manager, I highly recommend following him on Twitter, as he has an amazing amount of charts about the European Central Bank and the bond bubble that they have blown up, distorting yields, driving yields down, and allowing this bond buying scheme that central banks are creating currency units out of thin air. I really think that this discussion is over about inflation and deflation, and the deflationists, the deflationistas, people like Van Meter and others ignoring asset price inflation, claiming that there is no bond bubble. There is a clear, it is 100% irrefutable evidence of a bond bubble in Europe with the Eurozone countries, with these countries like Portugal and Spain and Greece, all these European countries that should not have debt near zero or negative yielding debt, and yet they are still able to borrow more because the European Central Bank is buying up this debt. And the European Central Bank, with this new bond buying program, is projected to buy 70%, as you can see there in the chart in the upper left on your screen, 70% of all projected European Union government debt in 2021. Insane. So this is a clear bond buying bubble. This is asset price inflation. This is Japanification. This is the Cantillon effect. This is a scheme with central banks, governments. The governments are too big, and yet the central banks are subsidizing them. Who else are the central banks also subsidizing? The central banks are also subsidizing the large banks in Europe, who are able to continue to sell these bonds or front run the central bank, the European Central Bank, and collect big profits trading on leveraged trades. So you have all of this bond buying scheme that I've been speaking about for months. It has been well underway in the European Union with the European Central Bank for years now. And my friend Daniel Lacalle has been documenting this for a long time. Excellent charts on his Twitter about this. But also, not only in the European Union do they have negative yielding debt, it's also broken their discounted cash flow models and their capital asset pricing models. A lot of the things that people priced off with their discount rate, according to Danielle DiMartino Booth. So the European Union has had enormous amounts of distortions, misallocations of capital, and an enormous bond bubble. My friend Daniel Lacalle, another interesting chart is in the upper right-hand corner above the ECB balance sheet, which is going to be after the new bond buying program that was just announced recently in the last couple weeks. The ECB's balance sheet is going to be way above 61% of their total GDP. So, and it's going to keep increasing. But my friend Daniel Lacalle noticed an interesting correlation there in the upper right-hand corner, a correlation between the ECB balance sheet growth, which is linear, and the European bond index rising. So the bond bubble. So the bond bubble is starting to really take off, while the ECB balance sheet is going linearly. The bond index is just rapidly taking off. And anytime the bond index drops, the ECB balance sheet keeps increasing. Shocker, right? So this is all part of the bond bubble. It is a bond scheme, and the large banks, the hedge funds, big governments that are benefiting from these central banks creating currency units out of thin air, not counting it as inflation because it's monetary inflation and asset price inflation, not counting these things, and then allowing this bond buying scheme and the government and the politicians and the bureaucrats who are destroying the real economy to continue this nonsense, to continue bad behavior, while small business owners and workers in the real economy who rely on the real economy to produce cash flow are getting screwed over. So my friend Daniel Lacalle, he tweeted this out. The ECB's ongoing financial repression policy is perpetuating massive imbalances in almost insolvent countries and fueling a worrying bond bubble by absorbing all net issuances after redemptions. And the percentages that the ECB is buying of bonds are actually even larger than that of just the 70% or so, according to a lot of estimates, of new government bonds that will be issued in 2021. If you add up all the other bonds from prior years that are also being absorbed, it's even larger on percentages from researching for this video. So it's insane. My friend Daniel Lakaye has tweets about this, citing from Financial Times and other places. Just nuts. And this is the future probably that the Federal Reserve, Japanification, is headed towards, because the ECB's balance sheet is roughly about double on a percentage basis of what the Fed's balance sheet is relative to the US's GDP. And in spite of all this craziness that the European Central Bank just announced with how big their balance sheet is relative to GDP and their new bond buying program, in spite of this, the dollar index, which is still mostly, the dollar index is mostly weighing the dollar versus the euro and the yen, mostly the euro though. And in spite of this, the dollar index is still weak. The dollar index is barely holding above 90, and it's looking like it's not going to hold 90, but we'll see. And we'll see what happens with the dollar tug of war in the not too distant future. But in the past, the dollar actually, on news of this with the European Central Bank and a bond buying program this large in the past, and many experts were predicting this prior to the announcement of the European Central Bank bond buying program, they said that the dollar would actually rally, and that has not happened, shockingly. So you know things are bad with the dollar and budget deficits here in the US blowing out, when even when the European Central Bank is trying to weaken the euro, when they announce a new bond buying program, when things are getting insane with the bond bubble in the European Central Bank, when you're starting to see negative yields printing with countries like Portugal and others that have no business borrowing that cheaply. They're basically insolvent, as many people have already pointed out, and yet they continue to borrow cheaply. That's how ridiculous this bond bubble is that the deflationistas are ignoring. So the dollar weakness, in my opinion, and I wrote an article about this for patrons if you want to check it out recently, it's mostly about the budget deficits. And the market is realizing and pricing in that the supply of new treasuries being issued with the size of the budget deficits here in the US is way more than demand is for U.S. Treasuries, from many different buyers in the past, whether that was China and other foreign governments, whether that's countries like India trying to devalue their own currency, because India, even though they're trying to devalue their own currency, they're not buying treasuries to devalue their own currency. India was buying dollars to devalue their own currency and buying their own government bonds. So the traditional buyers over the last couple decades of U.S. Treasuries, so your pension funds, China, many other emerging markets, those traditional buyers of U.S. Treasuries have basically disappeared, and the ones that are still there for demand for U.S. Treasuries are not able to absorb budget deficits here in the U.S., where politicians and bureaucrats will not cut back, and the budget deficits are on pace for almost $4 trillion budget deficits in the not too distant future. And that's officially off balance sheet. It is even worse. As I highlighted in a recent article for patrons, it's only $5 a month if you want to take a look behind the paywall. Please consider becoming a patron over on my Patreon and chipping in $5 or more per month, so that way I can continue to do my research and make unique content and be able to make a living. Because with my YouTube channel, my Google AdWords revenues have collapsed almost to zero. My YouTube channel subscribers have stopped growing in the last 9 months. There's no growth there. And my live stream shows have been shut down, and YouTube tech support is giving me all types of excuses, claiming that they did not put a strike on my account, even though I can't edit the title for a live stream show. I cannot turn monetization back on. I cannot even turn live chat back on. That's how bad things are with the live stream show. I have almost 150, and hopefully soon it will be over 150 unique pieces of content behind the paywall on Patreon in terms of well-researched articles. Some of the articles have taken me many hours to produce for lots of different topics about gold miners, silver miners, precious metal royalty and streaming companies, a lot of articles about the oil industry and other commodity industries, also global macro related articles. There's also audio podcasts on a lot of stock charts and technical analysis there too. And while you are getting unique content, if I go over 1,200 patrons and I stay there, I will sign up for another live streaming service just for patrons. So I will make this pledge, I will make this promise. If I go over 1,200 patrons and I stay there, so if I drop below 1,200 patrons, the promise is not going to stay. I have to stay at 1,200 patrons and stay there. I will start to do live stream shows just for patrons behind the paywall there. Will require additional capital. I will have to sign up. I think it's $100 a month for another service there to integrate with Patreon, to sign up there and integrate. So that will be an additional added bonus for patrons if you want to take me up on that. But please chip in if you can, as YouTube is basically trying to make this impossible for me to grow my channel or to make a living from making content.